What's up, guys? So, wanted to talk to you real quick. How do we calculate our debt to income ratio? Okay, so DTI. So that's one of the biggest factors when we start to look for a home loan. A qualifying factor is going to be what is your debt to income ratio. So I just want to talk real quick as to show you how you can actually calculate what your debt to income ratio is. Okay, so the first thing is when we talk about debt, what's included in that debt? So we're not talking as far as like utilities, PG&E. We're not talking, cell phone bill. When it comes to debt, we're talking the minimum payment of the items that are reported on your credit report. So, for example, if you have a credit card, we're not talking about what you pay. What counts when it comes to applying for a loan and your qualification is going to be that minimum monthly payment. So whatever that minimum monthly payment is, that's what we're going to include. That's what we're going to count. From there, you're talking student loans. The special thing about student loans, though, is that if you are deferred, there's no payments being made. Conventional loans or pretty much any loan across the board, we're going to count 1% of your loan balance. So keep that in mind. When you calculate your debt, you say, hey, if I'm not making a payment, I have to include 1% of that student loan balance. All right. The next thing to keep in mind, how you can calculate your debt is going to be, of course, car payments, judgments, any court judgments such as alimony, spousal support, child support, anything like that, any liens against you, even tax as far as taxes. And so if the IRS, if you have a payment arrangement set up, you've got to include that in your debt to income or in your debt ratios. Okay. So what you're going to do is once you've gathered all those items, you've calculated your minimum monthly payments for all of those. Okay. So even when it comes to the court document and stuff, let me backtrack. So when it comes to the court document and stuff, it doesn't matter what you pay or what you say you pay. It's all going to be what's on that court document. Okay. So believe it or not, no matter what you say, if you don't tell your loan officer that there's a court case, if you don't tell your loan officer you pay child support, we're going to find out later and it's going to hurt you. So if you've been to court, you know what those are. Please, I'm telling you now, you want to stay ahead of it because in the end, you don't want to be qualified and then come to find out, because we're going to find out anyways. Your lender's always going to find out if there's a court case. You don't want to find out later that now this child support or alimony, whatever it is that we didn't account for, now pushes your ratios too high. And I've had that happen. So you want to be upfront with everything you know. Even if you have a question about it, like, I don't know if this is included, should I include? Just ask, okay? So once you've counted all that, you have it all calculated. Now you're going to take that debt, you're going to add in your mortgage payment, which you can go online, get a mortgage payment tool. And I have an example that I'm going to go over in video 2. So it's going to be 2-part video. And then from there, you just divide that by your gross monthly income. Your gross monthly income is simply going to be your gross income. We're talking before taxes. What is that income amount? And so I'm going to dig a little more into that on the second video, but that's simple, easy way how to calculate your debt to income ratio. There's two as far as ratios, as far as when it comes to that really matter on conventional loan. Is going to be 32% front end, 45% back end. The 32% front end ratio is simply the new home, so your mortgage payment with taxes, insurance, if you have PMI, divided by your gross income, give you your front ratio. The second is going to be all your debt, including the new home, divided by your gross monthly income. That gives you the bottom number, which I'm going to go over again in the second video. That's your back end ratio. All right. So please make sure you tune in to part 2, and I will kind of break that down so we have an example to look for. All right. Take care.